Good evening, all. Ira Epstein with your SPDR ETF stock market review for the evening of Thursday, the 5th of January, 2023. I almost said 2022, but we're not there. Now, I call this Labor Week. Now, Labor Week means to me that it was the week that the market, just the way it's set up, we get all the labor reports this week, and then next week and the week after, we start getting all kinds of inflation reports. My guess is, from what we've seen, the jobs report, and that's the granddaddy report we're going to get in the morning, and by the time it comes out and we get to the spiders and all, this market will already have seen it, and we'll see how the reactions come in. Because you've been strong in the JOLTS data yesterday, the ad report, if you will, for jobs, then we saw Challenger Gray today say that corporations, they cut in half almost the amount of people being laid off from just a month ago. Then you saw ADP, the numbers go through the roof. People are hiring like mad. Then you get into the jobless claims, and instead of going up as the Fed was hoping, away they go to the downside. So the reports this week have been one way, saying very strong labor market. Is that going to go away right away? It is not. You're not going to throw the switch and that just suddenly goes away. Which also now leads us to the inflation. Now, if you look at Europe, Germany's already claiming, hey, inflation has peaked out, and their numbers are starting to show that. In the U.S., we've been seeing the very beginning of the peak. Things are slowly, I want to use that word, slowly going in the right direction there. They're going in the wrong direction in labor, the right direction there. Well, what if it keeps going like that? That's the problem. If you can't defeat the labor market, then no matter how you take the inflation down, the inflation giant's waiting for you, because as things get cheaper and people keep getting these jobs, they'll have more demand. They have money in their pocket, demand, and that's just the thing the Fed doesn't want. I mean, you don't have to go to business school to understand that concept. It's fairly easy. So I think you have to stay out of the way tomorrow, especially if you're a futures trader, of when the jobs report comes out, let the dust settle, then approach the market. Everybody will have an opinion on it, me included. So I can't wait to see it. And what I typically do when I get into that, number one, in futures, I refuse to have very many positions that can be impacted by it. I feel much more comfortable in ETFs and stocks with my positions, obviously, because number one, most of the time, people are, 100% cash in there. It's not the same leverage. The leverage in futures can be your real problem in the marketplace. It's a great thing when you're right, and it's hell when you're wrong. All right. So we look at the markets. Tonight, the stock indices are trying to rally back up, by the way. When I look at Costco, it just can't get out of its own way. And now the question is, how well did they do? Now, there were reports, and there are reports that came out today, saying that the online retailers did real well. Well, Costco's really not an online retailer. We all go into the store. We buy much more than we need, right? Because you can only buy it in bulk. That's the advantage of the pricing that they have. I mean, I have the biggest ketchup bottles I've ever owned in my life. I laugh about it all the time, but it's true, and away you go with it. Well, this is certainly not acting very good. You have a market that's got a higher high and lower low, and you're sitting at the lowest you've been in a long time at the 449.60 area. The market's under all the key moving averages, and they're all lined up bearish. And the objective, if the market gets hit here, is in the 439.88 level, with the possibility, if it decides to flip around for any reason, resistance back in the 464 plus area. And if it clears there, really, you don't have any resistance to way up there. But the bears are in control, and it has an embedded reading. So for me, what I'll focus on is in price. I'll focus on the slow stochastics. And until the red line closes over 21, rallies, to me, are selling opportunities. I like the fact that this market will open after the jobs report's out of the way. Therefore, I get to look and see, here's what I want to do and not do. In the futures, you don't get that. They're already open, so it's a whole different world. When we come to LIT, I keep hearing, a great question was asked today, and I was watching CNBC more than Bloomberg today. And a question was asked out of somebody, I think it was in Hawaii, the lady was, and she's one of the top investment advisors in the country. But what she's doing, she's been not a buyer of lithium or uranium or other things. She's been buying copper. And her answer is, electric cars need copper. If you're going to build, you need copper. Excuse me. I'm sorry about that, it's a dust. But that's what you need. This market, you would think, hey, with all the EVs coming out and so on, you'd have the demand. The market is clearly telling you don't need Ira to tell you that. The market's in a bear case until the red line closes over 21. The bears are in control of the market. In Apple, down again. It's almost a kiss of death that Kathy Woods of ARK just keeps buying this market on each break. I think last week she bought 175,000 more shares of this. I think it was Friday. So those are underwater too. Eventually, markets bounce, and even a broken clock is right twice during the day, right? That's the way that I look at it. But she is loading up on Tesla galore, and I know she's a big holder of Apple, I believe. AMC, wanted to bring this back. We've talked about Disney enough as to how the parent company of the movie's doing, of the movie Avatar. But AMC not getting a bump at all from this. What do you do when you go into the quiet season now? And it is the quiet season. You won't get major blockbusters until June again. You will get good movies that'll bring in an audience, the John Wicks and so on, probably by March and so on. But this is just laying here in terrible position as I see it. When you look at XLF, I think that the pros came out up here yesterday, and now the market is selling off. Yesterday was the day against the upper Bollinger Band, where I think the financial boys came out against it. In the industrial sector, this was a bear market rally. Why? The swing on and all was trying to turn up, but you're under the 18-day average. And what typically happens is when you rally up to it off a bottom or break back to it off a top, you'll play there for a little bit as the market decides what it wants to do next. And that's what we're at. We're at the point where the market's got to decide what's the next trend in this going to be. In the semiconductors, I like what I'm hearing. Did you hear about Dell? They'll be out of China. They're not going to have them with any of their semiconductors. Apple moving production of its phone out of China, quite a bit of it, in fact. So Foxconn, I saw, got hit on that news. And you lost the embedded reading. It's time for me to say to traders, hey, with the lost embedded reading, I want no part of it anymore. The bear money's been made. I don't know that it can get back up and through all this. And even if it did, the setups are all strange. But it's time to not be on the short side anymore. The play's been made. In the home builders, okay, what are interest rates going to do? You know, everybody needs a home. I can tell you, you know, it's not going to change. We're in January, but February and March, the people go shopping. And they start looking for the spring market. And regardless of the interest rate, there are people with money. The home builders aren't building probably many spec homes at this point. They'll take homes on contract. They'll put up a home. You want it? Hey, we'll have it for you in a year, whatever the time frame is. And that's what they're probably doing. I've seen that before. Then there'll be, if rates get high enough, you know, some of the companies will do financing. There's many things that you do. Why? Again, my gray hair tells you I've been through these things. Everybody does not go out of business. What they do is they get creative within it. That's what makes businesses. So there's opportunities. Not every home builder is a custom home builder. You get the tract builders, but they don't have to build the whole tract. They'll come in, yeah, I could have this for you at X period of time. Tell me what it is. That's not the same as a custom home. In XLE, you're back to neutral. And I was telling traders yesterday, I said, and the day before, I said, you know, we have sell signals, but it's very hard for me to want to tell traders to go short into a 100-day average in a Bollinger Band. It's exactly where I say those short already are covering. Why do you want to take that over from them? In GLD, again, you get up to the upper Bollinger Band. I don't care if it stays over it. I realize there are times when it can hit it and run. That's okay. The word is there are times. Most of the time it won't. You get up to these zones. Would you have done poorly as a trader coming out there. Now, I had one gentleman that a subscriber wrote that Ira, your style for me just doesn't work. I'm a longer-term trader. And I wrote him tonight and said, not understanding you. The same concept plays out in the weekly charts. It just doesn't hit it as much. Same concept, same thing. The chart works the same way. It just, the volatility changes because the weekly chart won't be as volatile. And I'll be covering the weekly charts for you this weekend. In SLV, you got up yesterday to that number. I assume the pros took some money off the table. You fell back pretty good today. Okay, we'll see what that market can do. And then copper market, this is, again, the Chinese. Now, what did I tell you just recently? I know I said it here. I said you have narrowed in the Bollinger Band like you haven't done in a very long time. You'd have to go back to this area, but that's not even as narrow as it's been. This typically means you're going to, like a corkscrew, wind up prices for a move. You'll get false moves to the upside, false moves to the downside. So China came in today with news, they're going to do things, they're going to support the property markets, what they're going to do, get it going. But the Bollinger Band at 37.15, I contend, is still going to be a resistance point. We'll see. In TLT, here you are with the jobs data, right? And you would think interest rates are going up because everything's been so strong, but yet TLT is rising. So what the market is still saying, is the 20-year back. The market's building in the recession, doesn't care that the 2-year, the 3-month, the 5-year, whatever they're going to do, the very far back, they don't expect interest rates will stay very, in fact, they think they've seen a high on the interest rate. In UUP, this is the dollar index. You came from the lower band that we did, just before Christmas. If we rally here off the report tomorrow, a lot of resistance right here. And let me take the finger. The gray number, which that's what I was reaching for, 28.42, and the Bollinger Band at 28.41 are going to be your resistance points. And even if you have a number that kicks the dollar higher, I'd be very surprised if you don't see the pros coming out of longs at that number, as I think they'll come out of shorts down here. Now, in the futures market, on the euro, you already hit those numbers, and I think the pros ran away from those markets already. So you put it all together, you're trying to come up with game plans, and tomorrow's the day where this technique has its day. And what do I mean by that? You're going to have a lot of volatility. You're going to overshoot up and down. That's typically what happens off the big reports. Could I be wrong? Of course I could be wrong. But typically what happens is you get large moves back and forth on it. You get these center lines. That's what a pivot point is, with sell numbers above, buy numbers under. I explain it in a video series for free for you. It shows you a lot of how I teach and what I do. So if you'd like to learn about this, do I use it in spiders, ETFs, and stocks as I'm doing analysis? You can count on it that I do. So I look at it, learn what I'm doing, take a look. It costs you nothing to do that. Go to the website under free offers, or you'll see at the very top here, move your cursor up, there'll be an icon, give it a click, and away you go. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow. Take care.